So yeah, we finally got how to screen record. So now I'm screen recording. I'll just record it and send it to you instead of um instead of screen sharing. I think this one is better where you don't get you pause and replay. So let me go through what we did yesterday. We talked about candlestick anatomy, how that a candlestick is made up of two is made up of four components. One is one is the wick or the high and the low. Basically the wick is what makes the high and the low. So this one here is our high for bearish candle now. For bearish candle, this one is our high, and even for bullish candle sef this one is our high. But then let's continue. This one is our high. Then for bearish candle, the difference between bearish and bullish now is that for bearish candle, our open is at this level. This is where our open is. Meanwhile, the close is here. You get logic of bearish is logic of something that is coming from up to down is that it will start from up and then ends at the bottom. Then the wick here is telling us the lowest point where price reach. So let me use a candle for a real candle for that scenario. Um okay, look at this candle. Look at this candle here, this one. So this candle, you see that this is a bullish candle. The white one is bullish, the black one is bearish, right? So this is a bullish candle, and you see what happened. It started here. Anything that is starting from down to up, it will open obviously at the bottom. So it opens here, and then the wick is telling us that this candle went down to this level. So this is of the lowest point price reached. Okay, let me mark them. So price reach to this level here, then e now push up again up to this level. Now this is our high, right? Let me mark it. Then e now come back to close above the open. E close above the open. That's what made it bullish candle. So imagine this candle open here, went down, then up again. Then instead of closing here, e now go down to close below the open. If e close below the open, this candle will be black. It will be a bearish candle, because the logic of up to down things is opens anything going down, e start from the top and then ends at the bottom. So a candle, you can't say this is a bearish candle until that time frame is over. You get? So let's say this is a 4 hour time frame, right? So let's say e start here, go down, and then once e went down, and then you just conclude that this is a bearish candle. Meanwhile, 4 hours is not yet off. So in that span of 4 hours, you see that e now went up again and then close above the open price. And while you have concluded that it's a bearish candle, once 4 hours is done, you now see that it turns bullish. Why? Because it closed above the open. Bearish candle closed below the open, while bullish candle closed above the open. So that's just round up for yesterday this thing. Now let's go to um the main this thing for today. So today we are talking about supply and demand and how to identify supply and demand in the chart. So just like how physics is now, I say physics, economics, where the higher the demand, the higher the price, abi? Then the higher the supply, the lower the price. So that's what's happening in the forex market. So if why this price went up is because this demand level is high. You get. So let me look for an analogy to give. Okay, let's say you want to buy phone. You want to buy phone, right? A new phone is out and you want to buy it. If the supply of that phone is not much, in the sense that if there are no much of that phones in the market, the price will go down. You get. If the What am I saying? I'm coming. So yeah, if let's take this at as phone price, let's take this USD JPY as the price of phone, as phone. Now it's phone, not USD JPY, and this is the price. This is our demand level, right? So if the demand is much, the price will go up. But then if the supply is much, the price will go down. That's what I wanted to say. So if in the market the supply of a goods is plenty, the price will go down. It will not be valuable. You get. But once the goods is scarce, it will not be valuable. You get. So scarcity cause increase in price, meanwhile availability cause decrease in price. So economics said the greater the supply, the lower the price. The greater the supply, the lower the price. The greater the demand, the higher the price. I get it. So that's what is happening in the forex market. Now let's go back to this as our USD JPY, not for now. This is USD JPY. We are trading dollar against Japanese yen, right? So this is the price. This candle now is telling us the price of dollar to Japanese yen. So everywhere you see white, is telling you that the price of dollar to Japanese yen, dollar rose above Japanese yen. And where you see black, is telling you that dollar went down than Japanese yen. So supply and demand is basically where there are lots in the chart now. Supply and demand is basically where there are lots um of where there are a lot of orders. So let's say come or let me say, how do you spot this supply and demand? You spot supply and demand after an impulsive move. You get. Don't forget, the higher the supply, the lower the price. So anywhere you see price impulsively go down, it's telling you that there's a place, the initial place that price precede, the initial place was a place of supply. So look at this level, price went down impulsively, e went down. So this place now, this price action is telling us that this level is a place of the supply. You get. And what of demand? Demand is where you see price impulsively move up. They are everywhere in the chart. Okay, look at this place, this level like this. You see a consolidation before the price move up. So this level like this, you see from here price move up impulsively very fast. It's now telling you that this level is a place of demand. So this level, people are interested in buying USD JPY at this level. Yeah, let me shrink the chart so you see it clearer. Now you see the nature market structure. Hey, oh, we didn't do market structure. Anyways, we'll still do it. So look at what happened here. This is a supply market. You get. It's a bearish market. And what's happening in a bearish market? Supply is stronger. So look at this level. From this level, price went down, and then it tells you that people are interested in this level, this supply level. So price now went back to the supply level because of this demand. So basically what's moving price is what? Supply and demand. You get. But then market structure will solve every shall just ask your question, I'll still use market structure to elaborate it. So what's moving market is supply and demand. Where there is much supply, price goes down, and where there is much demand, price goes up. As simple as it is. So from here you see that price went down. So this level is a place of supply. If you go down, if you zoom out, this is a 4 hour time, sha no mind the time frame, make we just talk about supply and demand is in all the time frames. So see what happen, price went down from here, so this is a level of supply, and e now move up back to that level and still go down again. It's telling you that this place is a strong level. So this level created, this impulsive move created another supply level again. I don't know if you are getting. Look at this impulsive move here, this one that went down. It made here, uh, let me mark it well. This impulsive move is telling us that this place is a level of supply. You get? So what happened? Price went up to that level of supply, and then people are now interested in selling USD JPY. So people sold USD JPY and it went down to this level of demand. You get? And then people bought USD JPY at this level. Like we said, supply moves market. Where there is much supply, there is selling, much selling opportunities. And where there is more demand, there is much buying activities. So here there is demand here. Why is there demand here? Because we see price move up. It means people are interested in buying from this level. So people bought from this level and then went to our supply level, which is strong, and then many people sold USD JPY again down to this demand level where people bought it again um up to this supply level. Don't forget, the price moved down rapidly. It shows that this place is a supply level. So anytime price goes to that level, so let me use normal market scenario. Let's say you want to buy your phone, and if you want to buy phone is out at 1,000 naira, right? And then the supply of phone is very plenty in the market. Like the phone plenty for market. So because say the phone plenty, people no go value am, and price is value. It's value that depicts price. So if the phone is much in the market, people won't value it like that. So what will happen? The price of the phone will drop. You get? So let's take this for example. Where brush. So let's take this for example. This is where the phone is at, right? Phone came out, new phone comot for, what's this number now? This is the price, 155 156, right? The phone is out at 156, and then the amount of phone in the market is very plenty. What will happen? When there is no value, the price of the phone will drop like this. So this movement like this shows that the price of the phone has dropped, right? So what will people do now to buy the to sell their phone? If you buy this phone from here, you will not sell it here. Why? Because you are selling it at a much lower price. You will not make profit. The goal of the market is to make profit, right? So if you are selling your phone here, don't forget price dropped at this level. If you are selling it here, you will not make profit. So you wait for any time that the price of the phone will go up. So what happens here in the case of USD JPY as our phone, the price went up to this place, to this supply price, this supply level, which is our initial price. So it went down to this place, and what happen? Once the price went up to 156, okay, you bought the phone is at 1k, but let's say you bought it but price went down because there are much more people that sold it. Don't forget, phone is much in the market, so price go down now. but you bought it here and it didn't go up because the ratio of supply and demand people is very very different. Supply is much stronger than demand at this level and you are the only demand. So if you bought the price here, if you bought the phone here at 1k and then you see that the price went down and you want to sell the phone to make profit, you won't sell it at 400. So the price now is at 400, you won't sell it at 400. What you will do is you wait for the phone to go up to 1000 naira. So once the phone goes up to 1000 naira, what do? You sell it, and it's not only you that is planning to do this. There are much people in the market that are planning to sell their phone at 1k. So once they sell it at 1k, what will happen now? Much supply. Don't forget, una plenty wey dey sell the market, so much supply wey dey sell the phone. So much supply dey. What will happen? The phone will drop again. So that's the nature of forex market, is buying and selling. You buy USD JPY, you sell USD JPY at this point, and then you buy it here. Buying it here means you are exiting the market, you are making profit out of it. So now what we have here again is what? Another supply level. You get? Let's say you bought it here, price went down, you bought it at 1k, sold it at 900, right? Because this is a bearish movement. You get? You definitely make loss if you are selling that, except if you want it to go higher before you sell it. So now you sell it at this level. Much people sell it at this level. So this level is now a supply level. So what will other people do? They will wait for price to get to that point, then sell it again. So once they sell it, what will happen? Supply is enough in the market. Then the price will keep going down. The price of that phone will keep going down. Then where is our next supply level? Don't forget where we have impulsive move. If we see the price of something go so rapidly down like this, it means the consolidation level that caused that move is a supply level. So what will happen? Once it goes down, you wait again for price to reach to that level, then you sell again. Then once you sell it, you are not the only person selling it. There are much of you that wanted to sell it. So once you sell it, it now goes down again. So that's the nature of supply and demand. Then for demand is what cause bullish market. So this is demand. Demand here is buying, right? Supply is what cause price to go down. Demand is what cause price to go up. So in the nature of this market, let's identify demand from here. So we see a rapid move up like this. What is it trying to tell us? It's trying to tell us that this consolidation level is a demand level. So what do we see price do? Price come down to this demand level and then plenty people buy it from here. They bought USD JPY from here, from this demand level. Then what happen now? We see the market go up again. Then many people waited for the market to go down to another supply level, which is this level here. This is a supply level. Why? Because we have price rapidly move like this. You see how this white line go like this white candle, it means say price move with force. It means demand is here and plenty people sold it, that made the price move up. Demand plenty people are needing the product that made the price move up, and then sells not sold, buy actually. So buy. This one now, as price go down, why this price move down? Check, you go see say supply level dey here. So basically what's moving the market is supply and demand. So as e come, why is this place a supply level? Because from here, from this consolidation, this balance place, you see an imbalance. An imbalance is where price move without a balance. It shows the strength of movement of price. So you see an imbalance here. It shows that this choppy place is a supply level. So as price get to that place, it drop with strength, right? Then we have what we call violation in the forex market. Violation is where price violated what it's supposed to do. So in this scenario now, there is a supply level here. According to the normal laws of price, what is it supposed to do? It's supposed to come to this place and then push down. But it violated it. And once it violated it, this level now becomes demand level. You get? This is a supply level initially, but price violated it and now is a demand level. So what do we do? Wait for price to come down to the demand level and then you buy from there again. So you can see price goes down very close to the place and then you buy. Price no clear this imbalance sha, but if you go further, no matter where price go, you will see that later e come back to clear this imbalance. You get? That's to fill the gap. So where do we have our next demand level? We have a demand level here. Then what happen? Why is price not coming to that place? Is because in the nearest future you have price come, now you see it. This is a demand level. So you see price come back. Anywhere wey price go, you must look for one demand level to balance. E must balance. Price is balancing. It's balancing. Anywhere there is a quick move to the upside, it creates an imbalance. So price will find its way to come and balance it. That's that's demand and supply. So we can see something from here again. From this place, you can see a rapid move here. So it tells us that this level that caused this rapid move is a place of demand. So we wait for price to come down to that level. Plenty pipu dey wait, no be only you. Den una go buy USDJPY together, and once una buy am, because demand is much, price will go up. I don't know if you get the concept of demand and supply, but then that's just it. Demand is where price, okay, look at this place. There's a rapid move, and here now becomes our demand level. Price comes down to that place and then move up, come down. This move again tell us say demand dey here. So as price come down to the demand level, e go up. You get? See all the go up wey you dey see, wetin cause the go up na your demand level. So you wait for price to come down to that place and then go up. So what I was saying about market structure is market structure supersede all. Demand and supply moving the market, but market structure supersede all. You get? It's just like, let's say um if they say the overall market price for maggi is very low, you get? They are trying to say the market structure, the price structure of maggi is down, is bearish. So there are people that will still buy maggi and make profit, but the people that are selling maggi at that level are the ones that will make big profit. That's what market structure is. There are people, look at this level now. This market structure is down. Let's say this is for maggi now, is going down. But there are people that will buy from here and it will go up, they will make profit. Others will buy for here, from here it will go up, they will make profit. But the people that are selling are the ones that are making the bigger profit. Why? Because the structure is easy, and because the structure is a down structure, and then it's easy to be selling. This is a demand level. So this is a supply level. You just wait for the price of maggi to go up, you sell. Create another supply level, wait for it to go up and sell. Create another supply level, wait for it to go up, then sell. Go down again. This is a supply level. This level like this is a supply level. So you wait for price of maggi to go up to that supply level where plenty people are waiting for the price to reach there, so they will sell. Hey, my battery is down. Like that, like that, like that. So that's just about market structure. Market structure is the overall say of the price of the commodity at that particular point of time. So if they say the market structure is bullish, we are trying to say this commodity is going up. So what do? You look for demand level to buy from. You can sell but it's riskier than buying. So you look for demand level to buy from. um my battery is down. Make I save dis video before battery off finish. So but I guess you understand, you understand a little bit, which you will still, if you don't get, your questions, if you don't get, drop, give me your questions. How many minutes dis video don